Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Thursday, September 23rd. As always, run your video player at 1.25x. I think you'll be quite pleased with that speed. Taking a quick look at markets, equities are set to open higher, about 0.6 across all the indexes. Commodities are pretty much flat. The Nikkei is up 0.5%. On the macro front, we've got, of course, jobless claims every Thursday. We've got a Chicago Fed economic number coming out, flash PMI. We've got the Kansas City Fed out with their manufacturing index, and natural gas inventories at 10:30. Got some marquee names for earnings today. Got Darden Restaurants before the bell. That'll give a little read on the restaurant complex. And then after the bell, we've got Nike, Costco, and Trip.com. I think the Nike and Costco earnings results are going to be really interesting. Looking at the cost input factor, and also with Nike and maybe Costco as well, the logistics situation. Nike makes a lot of shoes in Asia, and as we've talked about, over the last few weeks, there's a record number of container ships sitting off the port of Long Beach in California, 59. I mean, every week it's a new world record, 59, 60 ships waiting offshore. And so, as Nike produces these their products, clothing and shoes and stuff in Asia, and then tries to bring it in, what kind of bottleneck is that? We know that shipping rates have gone through the roof. What impact on margin will that have? Are they able to pass it through? What percentage, etc.? So that'll be real interesting. Now, Costco, remember that we had been long for a long time on Costco, and I got out. It turned out to be a little bit early. But I think I haven't looked at the chart, but if you're still in it long, don't forget, make your own decision, of course, but just be aware that earnings are after the bell, and don't get, unless you want to hold through earnings, make sure you do something with your position before the close of business today. Okay, let's run through the charts real quick. I always say real quick. It never turns out that way, but we'll keep trying. We had the Fed yesterday, and they decided to hold off until probably next meeting. That's what the language sounded like. Don't forget, there's no Fed meeting in October. The next time that they meet will be in early November, and probably announce a taper starting in December. So that was well received yesterday afternoon. And as far as the price action goes, I didn't think there'd be a lot of price action to note heading into the FOMC, but of course they rip it heading into the print, and I think that's a good lesson. One. Very easy to be humbled by the market when you're making predictions about moves, etc. That's the chair that I've chosen to sit in, and I will continue to give commentary, and hopefully that commentary is on point. But of course, yesterday it was 100% wrong. So that's why price action and levels count a lot more than whatever commentary I might have. When you saw those levels break into those gaps yesterday, hopefully you had them marked and were able to say, okay, if they want to ramp it, let's get on board. So anyways, I hope you were able to participate in at least a few nice trades yesterday heading into the FOMC. So no real effect on rates. If there's no effect on rates, we've got really no reaction on TLT. I would still continue to have 152 alarmed and 147 alarmed. And if you are interested, you can also have an intermediate level here at like 149.50 if you want to, try to actively trade inside the range. But in order to get a meaningful trend type move, I think you're going to need to see either a breakout or a breakdown, and then coming out of that range will be the new short-term trend after this consolidation period. VIX, they've crushed it since Monday. Tagged 29, and now we're down to a little over 20. I would still consider 20, spot 25 as an important level. As long as that holds as support, then there may be more downside corrective activity. But if they crush it today and push it under 20, then that's going to bode really well for risk appetite going forward. Equal weight SPY. Monday drop, Tuesday bounce, but closing on the lows, and then yesterday up. I think this gap has been filled. You can see the tail reaching up into that gap. The thing I want to see is a close over this breakout level, 150, 150, and then ultimately recapture these moving averages. You can see that the fast ADMA is below the 50 and the 20. So coming from high and losing the EMAs from above is bearish, and then recapturing them from below is bullish, with the 50 EMA being the most important. Moving on to the cap-weighted SPY, you can see here that we reached up during the day and we tagged the 50, which is located at 440 on SPY. And so today, we're gonna, if the pre-market holds, we're gonna gap higher, and then we're gonna have the same exact setup that we've had for the last 2 days. Gap higher, which will leave the gap below, right, on the gap up, and then do they do a gap and go, or do they backfill that gap and go higher once the gap is filled, or do they keep heading south? Those are always the options that you have, or that will occur on a gap up in the morning. So moving on to the SPY 2 hour, I think you can use this 438 as a pivot. Now we're going to open a little higher, but of course then we'll have the gap below. So as long as price can stay above 438 today, I think you can stay long. I think an important level is going to be 440. That's where you can see the 50 comes in gold. So if we can, or if price can take that out and then take out the top of the gap, then we start grinding higher. And you can see the fibs here in brown that I've got dropped in. And so we've got the 618 retracement and 50 EMA both converging at 440. And I think that's going to be a really important level for today. And notice yesterday, that opening gap. They came back halfway, but we still have a gap open below now. So we've got a little ways to go on the gap from Monday to fill it, and we'll have an open gap below that will, of course, get filled at some point in time. I mean, it could be today or, 3 months from now. We don't know that, but it should be marked on your chart. Not a big gap, about $1.50, but, as we've seen, those get filled over time. Qs. We've got the gap from Monday. Tuesday, we tagged the 50, but closed below. And then yesterday, we closed above the 50. So that's a bullish technical event. And then we've got the remaining gap to fill here, which we can see on the 2 hour a lot clearer. We made a little run, came up here to the 618 retracement on our fibs. Almost got a touch, didn't quite get it. But now, we're going to be set to open higher. So there'll be, a gap within a gap. And then the same scenario that I laid out in the Qs, or in SPY, will be for the Qs as well. There'll be a gap below, and then a remaining part of this gap to fill above. So at the end of the day, I think you can use the bottom of Monday's gap as a pivot point at 369. And then you can stay long above and potentially take a tactical short if the market reverses and comes back down. I don't think we're totally out of the woods yet. I'm always a little leery of moves right after the Fed. They're usually fake moves, but we just got to watch price action real carefully here. And it may take a day or two, through Friday, and to get that volatility and true direction out of the market. But it's been encouraging price action so far. Now I want to show you on the 30-minute chart yesterday's price action, because it was interesting. And there was a good opportunity here. That's why I want to show you. So we've got the Qs. Remember that on Tuesday, we had this consolidation action between 366 and 368. And then yesterday, we had a gap higher, right out of the gate. But notice this wick on this candle here. That first couple of bars of the day yesterday, if you go back and look at a 5-minute chart, the first 2 or 3 bars were red. And that was this tail reaching down to close the opening gap, came right down, filled it almost to the button at 366, and then started reversing. So that would have been an opportune time to buy its support at 366 with a stop below, and then you were able to kind of sit tight for this run up, whether you got out here at the top or just held firm. You maybe would have closed out before the Fed, but that was, let's say you just got the bottom 366 up to 370, say that was a nice trade. And once you got in, they stacked the green candles, so you didn't get any scary shakeout moves. Of course, you don't know that when you're getting in. All you know is, hey, I'm buying at support, and you can see here with my green arrows that in Tuesday's price action, that 366 level was tested a bunch of times. So there should have been some psychological confidence there with you that, hey, it's held like 5 or 6 candles already, so got to take a shot there. And if you get stopped out, you get stopped out. But that was a really nice trade location. The small caps actually outperformed yesterday. They were up 1.5%. And you can see that yesterday they left a gap behind down here from like, what was the prior close? Yeah, 217.50 up towards 218.75. So there's like $1.25, $1.50 gap there left behind. And so today, I think a real key level is going to be this 222. And that's where the 50 EMA comes in on the daily. And I think if you take that out, you've got a really good pivot point for active traders going forward. So remember that we're in a giant trading range if you go out to the daily, and this 222 level and 224 level are right at the midpoint of that big trading range. And you'll remember this was the breakout zone of this, and that gave us a nice move up to 230. I think once we recapture, if it does, the 50-day EMA, then that would be a very nice anchor point for you to get long with a stop below. And then if everything falls into line, we take out 224 and make a run back up to the prior high. And so you can see that here. Here was the Monday gap. Here was the gap from yesterday. So I think above 222, there's going to be a little resistance band at 223. 224 will be important. And then we just go right on up. Today, excuse me. Be concerned if you start dropping and losing 220, and especially if we lose 218.50. At that point you're rolling back over. You may come back right in here and fill this gap and go, or gap and reverse. But I think the most bullish scenario is gapping up this morning, but then holding 222, coming back for a back test. Facebook had a bad day at the office yesterday, and I sent you that note shortly after the open. The new Apple privacy policies and all that kind of stuff is apparently starting to dig in materially to Facebook's ad revenue off of the iOS Apple platform. I guess, more information will come out as to actually what the specifics are, but big gap down. Then follow-up selling after the gap. Here, down to 342.50. Now, it was a little higher this morning in the pre-market, but remember, this is you can actually set this up as a bracket trade to where I think let let me look at the daily. I want to show you something. Yeah. If imagine a bracket around yesterday's price action. I don't have it marked here, but if you break into the gap above, you can be long, or if we break yesterday's low, then you can get short and look for a move down into the mid 320s. So I think there's going to be a trading opportunity there. Here was the low, 342.50, and then here's your bracket entry at 350. So if you got a move back this morning, we gap higher a little bit, and then they come back to fill the gap, you can get long at 342.50 and then look for a move back to 350 and a potential gap fill to 357.50, or you get the break below if there's follow-up selling, and then you're going to be down in the mid 320s, because look, there's a massive void in the chart below the low of yesterday. So I think there could potentially be a lot of follow-up selling, and they were really leaning on it yesterday in the options. A lot of longer dated puts out into October, November kind of thing. So there was some big money leaning against this yesterday. So I think it warrants some alarms at 342.50 and at 350, and then you can engage when you want to engage. But I think there's going to be some nice trading ops in here for active and even swing traders. Apple closed the gap, and so now the top of the gap at 146 is your pivot, and then you can see all these little intermediate sticking points or overhead resistance. And so what you can and should do if you're actively trading it is, as we go higher, then you can move your stop up every time that price makes it to a new level. So let's say you were long from yesterday and you held your position, and then this morning we go up a little bit and this 146.50 is taken out. You can move your stop up. And then we go up to 147.50. You can move your stop up, etc. So you can stay long the trade, but are moving your stop up the whole way in case there's a reversal. If you're longer term, then of course you can get longer dated options if you want. If you think this is the market corrective activity is over, we have broken above the downtrend line and filled this gap. So those are two, bullish events. So, it looks good so far. Of course, what you don't want to see is come up here and reject and roll over and then potentially test that prior low. And I think that should be the scenario across all your stocks that you're trading, whether it's SPY or any other one. If this is just a kickback reflexive rally off of the downtrend, a kickback rally, and then it rolls over, then I think your target would be back at the bottom of the range where we had this prior low. Because, we've seen many, many times that prior lows, they come back to test before truly taking off. So we're going to have to watch that really carefully. Tesla was up yesterday, but now it's in the middle of the range. I think if you're an active Tesla trader, if you're not in already, you got to wait for a move either back to 740 or a breakout above 760. And if the market seems really constructive and you get that breakout above 760, that is one I would definitely take. Why? Because this level has been tested so many times. You can see there's been a lot of trading in that area. And so what happens is that the energy in the stock is building under resistance. And then when you get the breakout, that's when you can get, that explosive move. So either way, whether you get a pullback to buy into 740 or there's a breakout first above 760, I think either one of those scenarios would be bullish. What you don't want to see is a break below 740, because then you're going to immediately come back to 720, as we've seen here, how important that level was. See, this is the same setup that we had back here. Notice consolidation, little breakdown, come back up to resistance, then break out. Consolidation, breakdown to support, back up, test resistance, breakdown to support, back up. And so you've got this W look here. If you get that breakout at 760, I think that would be a good one. Microsoft filled the gap yesterday, pulled back into the close. I think this morning, depending on where it gap, if it's set to gap up, that you can buy roughly 299 or 300 on the way back up. Or if it gaps higher and then back tests 300 or 299, you can buy that as well. It kind of depends. And I would consider this 299 to 300 as a zone, because you can see that there's, the wicks have come all the way up on a couple of occasions, but then the bodies of the candle have only been able to make it up to 299. So that there's more of a range of support and resistance between 299 and 300 than a specific line. But definitely anything above 300, I think you can be long. And then you've got some resistance at 302, but then right back up to 305. And remember, the grand prize is a breakout above 305. Then I think you're looking at 315 or higher on a measured move basis. Amazon has not gotten back up to the gap yet. If you had a pull in to 3370, I think you can buy that and hope for a gap entry. Or this morning, if you get that gap entry at 3400, that can be bought. And then you've got a couple little intermediate resistance points within the gap. But then your gap goes all the way up to 3460. And then, of course, we've got the remaining portion of the earnings gap from way back when that still needs to be filled. Google, same kind of scenario. Filled the gap. We'll have to see if it gaps up higher this morning. But I think the top of the gap here at 28.15 is an important level. And if price were to come back to 27 95, I think you should buy it there with a stop just below. So a lot will depend this morning on where it gaps up exactly. Just remember that if it comes back to fill the opening gap, that'll bring it back into this zone of 2805. And then if price comes back up through 2815, that's when you can hit it, because you can see that was an important level back in the chart. Netflix, nice day. Gap up. Never came back to fill it. I think 590 is your pivot here. If you can hold 590, I think you're in good shape as a bull. Use that as your pivot. You got a resistance level at like 598, 597.50, and then above that, you got open water to like 613, I would imagine. So this looks like a bull flag type action, right? Flagpole, consolidation, second leg takes you right back up to the top. Semiconductors almost fill the gap. I think anything above 271, if you're interested in semis, I think that's your pivot. And then you've got a level here at 272.50, 274.50, and 276. Remember, above 276 is blue sky country, and we've got a measured move target once we're out of this range up to 295. So there's still a lot of upside potential in semis if the market gets really bullish through the end of the year. And of course, keep the downside in mind as well. You could see a check back move into the bottom of this gap. And if you get that and it holds, that gives you an even better entry point should that happen. Now I want to look at FedEx and UPS. FedEx had a bad earnings report. Gap down hard. It was down 9% yesterday. But this sets up perfect for a bracket trade. If you bracket, set your alarms at 235 and 229. You get a breakdown, follow-up selling below yesterday's low. There's not a lot of technical support down below that level, and the bullish scenario is that 229 holds, and then you've got a $15 gap above that at some point needs to get filled. So I could certainly see a scenario. Notice we're oversold on RSI. I could see a scenario where, price gaps down, you get a bounce into 245 or 250, and then it rolls over. So it would put in like a like a bear flag, breakdown, back test, then roll over. So I think that's a nice bracket trade we're setting up in your platform. And really, because of the downside, this void goes all the way down to like 190. So if the freight train starts heading south, then there's a lot of downside there. Likewise, in UPS, same business, right? Gap above, we've been consolidating. A lot of you guys had this bracket trade already set up between 197.50 and 187.50, and we lost that yesterday. And so now price is sitting basically right on the 200. So a break back below the 200 would open the door for a move back down to 175, 172.50. As long as it holds, you could get a back test of 1 97.50 here, and then that would be another place, an objective location to go short. And so definitely a bearish chart. I mean, we've had a high, and now we've had a series of lower highs and lower lows. The question now is, does price hold the 200 at, where's it at? 184. So I would put that in your chart, and either one of these, I think, would be a good, if you wanted to have a short within your portfolio, oftentimes it can be a nice counterbalance to, to your longs. So anyways, those are just some trade ideas. Let's wrap it up there. If you're new to the channel, I certainly appreciate your time this morning. I'd like to think that the levels and, identifying the key pivots, support and resistance will really help you in your trading. Please hit the subscribe button and the alarm bell, and then jump over to show notes. There's a link there where you can go to the registration page of the website, drop in your email, and then you'll get all my content in your email box, and you'll also get an invite to the trading room. We'd love to have you. And of course, longtime listeners, appreciate your support. Please do me a solid and pass the link along to other traders in your network, other groups, Facebook, other social media. I really appreciate it. That support has really meant a lot to me over the prior months and years. So let's leave it there. Let's see if we can get this bull run to continue, but be on your toes. After the Fed, there's usually a little turbulence, at least for a couple days. So don't fall asleep. Stay awake out there. So have a good day of trading. Talk to you next time.